what happened last week? So last week I talked about there is definitely oversold condition right at the there's all kind of oversold channel. Last week we are somewhere around here, I think, yeah, 27. So I kind of anticipate some form of the rally because it's really oversold. But apart from oversold, and also maybe there's not so much commitment to the downside, I definitely can't really find any bullish components because it is up to the bulls to prove to us when there's a demand show up. We need the bull to prove to us and something like this. But it can also fail. I do talk about the failure because there's quite a lot of the failure right here. So we got a shortening of the trust, we got a hidden demand, we got a hidden demand here. But here's a very good rally until it actually reversed by this super bearish bar. Here's a demand come in, but we got a failure right here. So we got a reversal, failure. So we always need to watch out for the failure. So here is the demand, the hidden demand, shortening of the trust, spike of the volume. So however, we do get one bar straight. So this is probably some kind of the change coming, but immediately it got reversal. So again, this is failure. So we definitely want to watch out for failure whenever the market sentiment is super bearish, because when there is super deeply oversold condition with presence of the demand, it doesn't mean that the market will definitely rally. So it's up to the bull to prove to us they have the commitment to go up. So yesterday is probably the best bar that we have ever seen. So this is the best bar in terms of the magnitude. So in terms of the percentage, I think it's more than 2%, so 2.5% yesterday. So it's a lot better than this bar. So this is about 1.9%. So I would say that we probably can anticipate some kind of a follow through if today is a follow through day. So this is very important today. So if today the bar can actually commit above 37.50, so which is currently 37.53, which is kind of encouraging because right now is up around 1.7%, which is very good. Okay, so if it really can commit above this level, so the high of this bar, then I think this is the first sign we can anticipate some kind of the follow through. However, ultimately, this is the key level about 3800. So the 3800 is very important that it really need to commit above and stay above until you can sort of test this rate high bar. So this is a Fed bar. So when the Fed actually rate high the 75 basis point, this bar will need to get tested for a bullish, short-term bullish rally. So short-term bullish condition, I will expect it actually go all the way back to around probably this level. Okay, so ideally, I want to see this bar get tested. So there's quite a lot of the resistance ahead. So this is definitely a resistance ahead, about 3750, and also a round number 3800. So I can probably use this high. So it's probably somewhere around 3790 or 3780, but I will round it up to about 3800. So there are a lot of the overhead resistance ahead. So you need to just break above and also just go in to test this Fed bar. So this is not only is a Fed bar, but it's also a breakdown bar. So this breakdown bar need to get tested until we see a reaction come. So this is probably is a good rally, I would say. So in this case, I will still want to anticipate for the next reaction down, and then to judge about the character of the reaction and also the volume level as well. So I wouldn't just jump straight into like, well, we're definitely going to see the capitulation, super bearish scenario, and it's going to break 36 and we'll go down to 3,000. So I wouldn't just jump to that conclusion yet. If we get a test of the breakdown bar, all right? So there's the first case, because if that really happened, there is still hope that we are still pretty much stuck within the big trading range, 3,600 and all the way to about 4,300. So ultimately, this is the trading range that we are still dealing with, all right? So there's no change at the moment. So this is still the trading range. It's still unfolding. I don't really want to say, well, it's going to break here and then we'll just go straight down because of A, B, and C. So because there's a lot of the uncertainty at the moment and the sentiment is super bearish and a lot of the speculation to the downside. For sure, macro doesn't really look good at all. And you can find a lot of the things to support that. So there's no doubt for that. However, in terms of the price action, it is very much important. And it's the most important thing that we need to pay attention to. So if the rally can actually just come to this level, somewhere around 3,900 and test the breakdown bar and followed by reaction, then we still have a chance for S&P 500 to stay within this big trading range. So that could be a rally followed by a test with decreasing of the volume and then to rally up. So that is the most bullish case that I can think of at the moment. Of course, if this rally really caught everyone by surprise, it just continued to break out here and then going to test this CPI bar. That's even better, all right? So that shows a lot of strength behind. So that is definitely the most bullish case. And then until probably here, then we have a reaction and then eventually go up. So either way is bullish. However, what about the bearish case? What happened to the dollar index, the inverse relationship between the dollar index and also the S&P 500? So I will talk about trouble ahead. So what does it mean? So what's going to happen? So what I mean is, if we really see the dollar is pulling back and it's just keep pulling back, have a reaction, yet we didn't really see the S&P 500 to follow suit to have a very meaningful rally. So what do I mean by meaningful rally? The meaningful rally should at least test this breakdown bar. That is a meaningful rally. So this is a meaningful rally. This is a meaningful rally. This is a 1 bar rally. This is totally not meaningful at all. So this is what I mean. So there's a lot of the resistance level ahead. This is a level, 3800 is a level until here. So if we see that the dollar index still pulling back, going down, and also the 2-year bond yield is still keep falling down, yet it just failed to commit above here. So it still keep failing at the 3800 level with even increasing of the volume, increasing of the supply. So that really suggests that there's a lot of the supply presence in this S&P 500. So a lot of people want to get out of S&P 500. They want to sell into the strength. They see a lot of the potential downside target. So it really means like that. So that is something that we definitely want to watch out for. So if we really see that, with whether it's a rejection tail or whether it's a bearish engulfing bar or it's a key reversal bearish bar, something like that, either way, as long as it couldn't commit above 3800, it's a super bearish sign that we can sort of anticipate another move to the downside to break below 3600, and then eventually it will trigger acceleration to the downside and then to reach probably around 3400 level, which I think covered last week. That's probably based on the oversold level. So that's somewhere around 3400 level. So if it really happens, struggle to come above 3800 level, then the next level down will sure likely to break below and then eventually just accelerate to the downside to test 3400 level. So this is what we can anticipate if the dollar is pulling back, still continuous go down, while the S&P 500 just couldn't go up and struggle to come in above 3800 level, and also with a lot of the volume presence. All right, so this is something probably the bearish case that we can anticipate. So if that happens, we just need to watch the bar by bar every day. So we can't really just anticipate that, well, this is probably the last leg down. Yeah, we need to see how it actually unfold, because at the moment, the rally is still unfolding. We need to think about the bear case. So the bear case is fail to come in above 3800, struggle, and then eventually reverse, coming back down with increasing of the volatility, and then just break below. And if that happens, likely we'll just see the 3400 level quite soon. That is sort of the capitulation I think the bear will anticipate. So once we have a capitulation level, it's probably going to have automatic rally, and then we can probably start another trading range from there. But there's very far away. So we need to watch it bar by bar for now. At least the rally is unfolding right now. So yesterday is sort of like the change of character bar. And at the moment, the most important level is to break above the high of this bar, which is about 3750. So I want to see a commitment above, break above, and best in still need to break above 3800 level and to penetrate to test this Fed bar. All right, so Nikki said too many macro uncertainties ahead. CPI next release. Yeah, absolutely. And also don't forget about the NFP, the non-farm payroll this Friday. So I'm sure that that is going to move the market as well. So far, when we see this kind of the rally, whether it's 1 bar, 2 bar, 3 bar, it doesn't really matter, because this is really a deeply oversold market, or someone call it a sold out market. We can't be sure whether it's a sold out or just an oversold. So either way, if it is a sold out, then we definitely will see a more sustainable rally. So there's definitely a lot of the important events coming up. So CPI, like you say, is next release is 13 October. So this Friday we got an NFP. So a lot of the important event we need to watch out for. But so far, just based on the price action alone, we definitely see a lot of the swollen volume here. So there's a presence of the demand, so shortening of the trust to the downside, so suggests the presence of the demand. So we need to seek confirmation from the bull. So where is the bull? Here is a bull. So the bull kind of showed the confirmation. This is a good sign. But can it fail like this bar? We don't know yet, because so far this is unfolding. So today is still unfolding. Market is not yet open. At the moment it's 8:30. We still have 1 hour to go, and anything can happen. Even if it goes up for the first few hours, it could still reverse if the market is still not closed yet. So we can't be too happy at the moment. So like I say, we need to work out the levels where we need to witness whether the S&P 500 will come in above the key levels. If it can commit and also get tested and test this Fed bar, I think this is a very a very bullish case. All right. So at the moment, this is what I kind of anticipate. Definitely there is demand come in, and also there is change of character bar. And today, if we get a follow-through bar, likely we will see that it can still continue to the upside, and probably will test the 3900 level. So at that point, is probably going to have a reaction, because this is just a logical place to have a reaction. All right, so just bear in mind with that. So whether it can have the commitment and follow through to the upside to go all the way to 3900 is very important. If it fails right below 3800, or even can't commit above 3750, then you know something bad is brewing. All right, so the bear is probably will jump out anytime soon. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.